From Bell Direct. Julia, good to talk to you. Not such a good finish for the Aussie share market. We seem to be paring back the losses into that final hour of trade, but just couldn't hang on to those gains.
Righty, after a good session yesterday, the Australian market was under pressure today. I have the intraday graph behind me, and for a few minutes there, we actually were in the black before the Shanghai market came back online with a huge fall, sending the Aussie market back down lower. We're seeing the Shanghai composite down by 4.7% at the moment, and that's adding to jitters around the region. So Asian markets are down lower, and the Australian market has closed down 0.5% on the back of that. We're seeing the Dow futures down by 0.5%, anticipating a weaker start in the US because of the Chinese market at the moment. On our market today, we saw the staples and the utility sectors in particular being sold off heavily. They were the worst sectors on our market, but the best sectors were property and the industrial sectors. Of course, earnings were in focus because it is the last week of earnings season and the busiest. We saw Suncorp Netway down by almost 3% after saying that its profit had tumbled by 40%. Aristocrat Leisure also with losses today, down by 2.2%. It announced a first half loss, but Seek actually up by a massive 15.3%. Despite saying that its full year profit was down by 28%, the market seems to have liked the outlook on the shares, and we saw Oil Search up by 4.3%, even though its first half was down by 73%. So earnings very much in focus, but the Australian market closing on a weak note because of the Chinese market. We're seeing the Shanghai composite down by a massive 4.7%.
Yeah, very big fall there in Shanghai. Just pulling out some of the big stories today. Westfield extending its strong gains from yesterday.
We saw a little bit of pressure in Westfield shares on Friday because of the Telstra stake being sold by the Future Fund. But the last couple of days have been extremely strong for Westfield. In fact, we're seeing Westfield shares up around about 9% in the 2 days of this week so far. Yesterday, we saw the shares up 6.7%, and today they gained another 1.3%. Now, Westfield comes out with its result tomorrow. We're expecting to see an underlying profit of just under $1 billion, but it's really not that which is causing the buying into its shares. Seems as traders and investors are interested in getting into stocks ahead of capital raisings, and there's a lot of speculation in which stocks could be the next to do capital raisings. Now, brokers are a little bit divided on whether Westfield will do a capital raising because the capital markets have they have come back a lot, and so it's quite unlikely that they'll need to go to the equity markets in order to raise capital, and they'll probably go to the debt markets instead. But that hasn't stopped investors and traders speculating, and that's certainly helped Westfield's share price. If we have a look at the last 3 sessions, this is what it looks like for Westfield's share price, and we're seeing the same sort of trends with other stocks. For example, last week, Amcor's share price saw a run-up before it announced its result in a capital raising in order to take over Rio's Alcan packaging assets, and it looks like shareholders, investors, traders are wanting to get in because of the potentially big discounts which are applied to this capital raising, and the discounts tend to range from about 5%, or in the case of Rio Tinto's last capital raising, it was a discount of around about 60% there. So it does look like investors and traders are targeting those stocks that could be doing a capital raising.
And Woolworths set to tackle the hardware market. This wasn't really that much of a surprise, was it, Julia?
It's a pretty lucrative market. It's a $24 billion market in Australia. And if you have a look at Bunnings and the Bunnings result last week, you can see why Woolworths wants a piece of the action. Now, Bunnings last and its interest and tax actually increased by almost 12%, making it one of the most lucrative retail areas to be in. And so Woolworths looks like it wants a slice of the action. It will be doing it through a joint venture. Now, it's going to be teaming up with the world's second largest home improvement chain, Lowe's. And Woolworths is going to have 2/3 of the joint venture, and Lowe's is going to have 1/3 of the joint venture. They're planning to launch their first stores by 2011. And as part of that joint venture, they've made their first move today, making a takeover bid for Danks Holdings. Now, Danks Holdings distributes to hardware stores. In fact, it's the second largest distributor in Australia of to hardware stores. And we've seen Danks share price absolutely soar today on the back of that announcement. If we have a look at Danks share price, this is in the last 30 days, and you can see that almost vertical climb up. The shares were up by more than 70% on the back of that takeover bid. Now, the news hasn't been good news for Westfarm Wesfarmers, which faces more competition going forward. So its stock down 5.7%. As you mentioned, Bridie, this stock was trading ex-dividend 60 cents, but the stock was down by $1.51. The market concerned about that extra competition and what impact that's going to have on profit because Wesfarmers owns Bunnings. And Woolworths are up by 2.2%, so the market really liking the news there.
And Julia, we get to ask you some more questions about different stocks tonight.
8 p.m, your money, your call. So if anyone wants to dial in, they can tune in at 8 p.m.
Can't wait. Thank you so much for that, Julia.
Thanks, Bridie.